Okay, mayong udto sa tanan. And again, this is our asynchronous class for Math 102. Okay, so into this topic, I'll be introducing a new topic, a financial concept, what we call perpetuities. Okay, so perpetuities. We'll understand few definitions about perpetuities here. So in here in my slide, okay, for a while, I'm the perpetuity. What is perpetuity or perpetuities? Okay. Perpetuity in a financial system is a situation, okay, where a stream of cash flows payments continues indefinitely, no? So the concept is indefinitely. So meaning so on and so on, okay? So but later we'll clarify what is actually the term indefinitely, because you may mislead of that term, no? So because if I'm literal meaning of indefinitely is continuous without end, okay? So or it's an annuity that has no end. Yes, okay. In valuation analysis, perpetuities are used to find the present value of a company, future projected cash flows, streams, and the company's terminal value. Okay, essentially, a perpetuity is a series of cash flows that keep paying out forever. But again, no, as what I've emphasized, okay, forever is a textbook idea, but we will just discuss what is meant by that in our next discussion about perpetuity. Okay, so prior to that concept, okay, before we will tackle some few examples, we will discuss some concepts like bonds and stocks, because throughout the example we're going uh, to encounter these financial terms. Okay, so what are bonds or bonds? Okay, bond is actually a debt, no, utang. Okay, it is issued as a proof that a company or organization borrows a sum of money from an investor or from us, maybe, okay, or whoever wanted to invest in bonds. So it's an evidence that acknowledges the debt has been made. Okay, okay. So but it can be considered also as an obligation where the company provides the details of the loan and the payments, and when a company announces that they'd like to borrow money, they're said to be issued bonds, so they're called issuer, investor who acquire that called debt holders or creditors. So in the sense, in a bigger sense, if you see bonds, you look at investors, they're going, but we can actually invest in bonds as ordinary individual as low as 5,000 pesos or 10,000 pesos or 15,000 pesos. There's a lot of banks offer this investment bonds, okay, because companies nominate banks as their partner for that issued bond to collect or to somehow encourage investors to invest on these bonds, even like us, no, as a working individual. Okay, so in the next slide I'll be I get some of even the actually it just even the government is also issued bonds, no. So as we know, government has a lot of debts also, local, international, or foreign banks like IMF, Asian Development Bank, but they're also tapping the local market, considering us as Filipino citizen to invest in government bonds. Okay, so in the page of, I think this is Development Bank of the Philippines, these are their offerings of bonds. Okay, so just few, I have only two, like the denomination is peso. We have treasury bills, okay, or T-bills, no. It's a bond, and we have fixed rate treasury notes or FATXN. Okay, if you have monies or extra cash, you can go to the banks like Development Bank of the Philippines, which where I get this example and inquire regarding this bond and invest. Okay, so we'll discuss like treasury bills or T-bills, no. So minimum investment, unfortunately, is a big sum of around 100,000, and the tenure is 1 year and below. Okay, issued at a discount subject to tax 20%. Okay, there's a maturity term. Okay, this is what we call the time. Okay, the time that we can redeem these bonds, meaning this is the time that government will pay its utang or debt, or this is the time that a company able to pay its utang or debt. Okay, so another example is fixed rate treasury notes. Okay, minimum investment 100,000 again. Okay, have tenure 2 to 20 years remaining tenure. Interest is 20%. Okay, and that can be redeemed maturity for bring market rate subject to ability of buyer. Okay, this is some few examples of bonds issued by the government. Uh, a lot of prominent company like Ayala's also fix local market to issue bonds. I think similarly, aside from Development Bank of the Philippines, there are other uh, banks who offer also bonds as an investment. Okay, so another financial concepts that I'm going to discuss is stocks. Okay, what is stock or stock? No, so according to these definitions, I get this from the internet. When a person owns a stock in a company, the individual or us, if you or if we opt to be, which I also doing this by myself or as my personal endeavor, a shareholder of that company and is eligible to claim part of this company ownership. No, so residual assets and earnings should be the company ever to have dissolved. Okay, the shareholder may also refer to as a stockholder. In terms of stock shares, equity used to interchange. This can be also interchange in non-water financial language. No, stock shares, equity. The stock market consists of exchange where investors can buy and sell individual shares of the company. So just to expound this, what is stock? Okay, so in the Philippines we have PSE, the Philippine Stock Exchange, where listed companies trade their stocks. So I use this PSE also, and we have brokers, common brokers like BPI Trade, Call Financials, Namora with the BDO as a counterpart. A lot of stock exchange brokers. No, you can maybe in some more topic I'll be discussing you how to invest stocks using this financial platform or financial broker. But maybe in the later topic, before we finish the concept, the application of finance as one of the topics in your Mat 102, and we will have some or concise discussion of how to invest stock market. No? Okay, no. So uh, before we proceed with this concept, okay, so I'll be using the I'll be I'll be using this whiteboard. Okay, so uh, to somehow discuss, no, the financial concepts about perpetuity, no. Okay, so here are the two common formulas of perpetuity, and I get this from the corporatefinanceinstitute.com, and we have here the first formula, present value of perpetuity formula. Okay, so PB, which we know this is a present value, is equal to the C, which is amount of continuous cash flow, meaning this is the definition of continuous, meaning walay pagputol, no? And R is the interest rate or yield. Okay, so uh, suppose, okay, we invested in stocks, for example. Okay, so this is our stocks. Okay, okay, so stocks, for example. Okay, So we invested like let's say uh, simple amount, okay, 5,000. Okay, that is our investment in that company. Okay, so we expect that this company's grows, okay, over time, and we wanted to earn our investment, okay, every year, no, because company uh, if doesn't have problems, okay, release dividends, okay, dividendo, no, this is the earnings, the share of the earnings of that company, no. Some company release it quarterly like Globe Telecom and PLDT, okay. So but most of the companies listed in the Philippine Stock Exchange release dividends yearly. And there are also some companies that don't release dividends, meaning the income of that company they wanted to reinvest for growth, no. So that is the reason why they don't release or suspend release of the dividend in a year or in a particular period. So suppose, okay, we just assume that this company is growing, no? This company is growing, no? So you invested 5,000 for the year zero, okay, for example today, and hoping that in a near future or upon retirement at 60, for example, is you'll be able to get much by that investment, no. So how we're going to compute in this case, no. So we have here our PV, okay, this is our present value. What would be the present value is equal to C, okay, C over in based on our formula. So C over R, okay, okay. So we just define C here, okay. So meaning the average dividend that through your 5,000 investment, for example, 10 pesos, okay. That's annual, okay. That's annual, okay. So let's assume that this is the annual dividend, no. So this is the annual dividend, okay. So I just emphasize this is the annual dividend, okay. That's annual dividend of 10 peso, for example, okay. So what would be our PB? So we will have here 10, okay, over, let's say the interest rates, okay, the interest rates is the average interest rate, for example, is let's say R equals 10%, okay, 10%. So that's 0.10, okay. That this is actually equal to, if I'm going to use a spreadsheets, so here example this is 10, okay, that interest rate is 10%. 10%, I'll check. Yep, we assume that's 10%. Okay, so that's 100, right? So that's $100, okay, that's 100. So this is 100, okay. So what is 100? Okay, so meaning 100 is the amount you receive, okay. This is your PB, so meaning this is your present value, okay. So C, the 10 peso is the amount of continuous cash payment, okay. So meaning this is the amount of continuous cash payment, meaning for example in a stocks that we make at example, this is your dividend, and there's an interest rates or yield which is R 10% for example. So that is our PB, no? So another concept, okay, another concept here is that perpetuity with growth formula. So meaning perpetuity plus growth consideration, because we assume that a company is built to grow, to become bigger, like Ayala Corporation, like Facebook, Google, Microsoft, something like that. Okay, so I hope you're familiar with that. So this is the formula, PB, which is the present value, equals to C. This is the amount of continuous cash payment over R minus G. Okay, so R is the interest rate or yield, and G is the growth rate. So just to emphasize what's the difference between R and G. R is the interest rate or yield, meaning your gains, and G is the growth rate, meaning this is the growth rate of the company. So meaning if a company for example operates within Luzon or within the Philippines, in some period of time they will be expanding to Southeast Asia nation. So meaning they're growing, no? And basically growth is expressed in percent. So taking those previous example, so by this um, example, no, here, what if the growth rate is equal to 5%? Okay, so 5%, no? So we've already identified what is the difference between R and J. So the formula of PB would be C, okay, R minus J, no? So if I'm going to translate it to numbers, that is 10, okay? So R is 10%, okay? If I'm going to convert it into decimal, that's 0.10 minus J, which is 5%, 0.05, okay? Or this is actually equal to 0.5. So if I'm going to go to our spreadsheets, and we will um, 0.10 minus 0.05, okay, so okay, sorry, no, okay, so that's 200, right? That's correct, is it correct? Okay, so for example we'll consider this 0.5. Let's find out. Yeah, that's 200. Okay, 200. Okay, 200. So what is 200? By our definition, this is the perpetuity with growth formula, no? Perpetuity with growth formula. Okay, I hope you got some concepts on our lessons for today about perpetuity, and on the next meeting, or probably Wednesday, we'll try to solve another problem, more example, complex example, real applications about perpetuity, so that you can somehow appreciate it, and maybe on before we end up our discussion on finance, which is being emphasized on your syllabus, we'll discuss some few basics on how to invest in stock market, like if you have 5,000. Okay, so uh, again, no, thank you for your time, and I hope you're doing fine, good health. Still COVID is there, and the infection is increasing, so do not be complacent. Please consider not only yourselves but your respective families as well. And again, no, this is the end of this topic. Thank you for your time, and we don't have assignment or homework for this topic. Maybe later or next meeting we will have one. Thank